From October, Australia's property market is about to change forever. The government's deposit scheme is being expanded. 5% deposits, no limit on placements, no income caps, and much higher property price caps. Now, this sounds like help for first home buyers. But history tells us it could actually fuel one of the biggest price surges we've seen in years. And today, I'll break down why this could push prices higher, which suburbs are most likely to become hotspots for investors and owner-occupiers, and the risk you need to watch out for. So let's get into it. So here's what's actually changing. Buyers can get in with just 5% down, and the government guarantees the rest. No income limits anymore, meaning higher earning households can jump in. Unlimited places, no cap of 35,000 like before. And the higher price caps? Sydney from 900,000 to 1.5 million, Melbourne from 800,000 to 950, Brisbane from 700,000 to 1 million, Perth from 600,000 to 850, and Adelaide 600,000 to 900,000, and Canberra 750 to 1 million, and lastly, Hobart from 600,000 to 700,000. On the surface, this looks like an affordability help. But let's talk about why these changes could actually drive prices up faster than most people expect. When you suddenly open the floodgates to more buyers, history shows us what happens next. Demand spikes and prices usually follow. There are four things that are going to happen. First, we can expect a demand shock. Couple in Brisbane with 50,000 save could only afford 500,000 before. Now, under the new scheme, that same deposit can stretch to 1 million. That instantly doubles the buyer pool in Brisbane's mid-tier suburbs like Jamboree Heights, Hemmant, and Bundall. Second, there will be borrowing power expansion. In Sydney, a 75,000 deposit now allows a 1.5 million purchase instead of 900,000. Suddenly, suburbs like Parramatta, Greenacre, and Wentworth Point are back on the table for first home buyers, pushing competition up. Third, supply problem will get worse. The government targets 240,000 new homes a year, but completions are tracking at 170,000. In markets like Melbourne's West, Yalba, Deer Park, and Kings Park, supply is lagging badly, meaning higher price cap equals instant upward price pressure. And lastly, interest rate cuts will add fuel. Borrowing capacity has already risen about 7%. So in Adelaide, suburbs like Salisbury, Parafield Gardens, and Paralowie, still under 750,000, become far more attractive for stretched buyers. Investors often win in these situations, but only if they focus on affordability, rental returns, and timing. Now talking about affordability. Suburbs under new caps, 950,000 in Melbourne and 1 million in Brisbane, will see a surge in buyer competition. In Melbourne, some of these suburbs are Craigieburn, Point Cook, and Caroline Springs, which are just under 950,000 cap and are high demand areas. And in Brisbane, Deagon, Bald Hills, and Fitzgibbon all are under 1 million with solid rental yields. Look out for regional spillovers. Affordable lifestyle towns could benefit as buyers stretch budgets outside capital cities such as Gosford and Wyong in Central Coast, then Ballarat and Bendigo in Ballarat, Victoria. Now focusing on rental yield safety. Suburbs with more than 4% yields and below 2% vacancy rate will attract investors looking to cover cash flow. Example are Perth's outer ring with yields about 5% with low vacancy rate like Stratham, Midvale, and Balga. Also, Adelaide's Woodville Gardens and Smithfields that are still sub 600,000 with yields more than 4.5% suburb fit this. For first home buyers, it's not just about affordability. It's about lifestyle. And that's where demand shifts differently. And talking about desirability and livability, family-friendly corridors like Werribee or Craigieburn in Melbourne or coastal lifestyle suburbs under 1 million in Brisbane will see more demand. Aspirational areas will be within reach, like Sydney's 1.2 to 1.4 million apartment hubs near transport like Mascot, Ryde, and Meadowbank, or Adelaide suburbs under 900,000 with strong schools. We'll also see emotional stretch. Buyers will push budgets to live where they want, not just where they can, fueling demand in most livable areas like Glenelg and Henley Beach in Adelaide. But here's the flip side. While opportunity exists, the risks are also very real and often overlooked. Government intervention always comes with side effects. And here are the biggest risks hidden in this scheme. First, negative equity risk. A buyer in Brisbane's inner south buys a 1 million townhouse with 5% down. If prices fall just 5%, that's 50K equity wiped instantly. Their loan balance is now higher than the value of the property. Second, mortgage stress. A couple earning 220,000 borrows at the top of Sydney's 1.5 million cap to buy at Parramatta. Monthly repayments at 6% interest could hit $8,000 a month. That's nearly half their take-home pay. Third, affordability illusion. In Melbourne, saving a 5% deposit for Tanya is just 3 years versus 12 years or 20%. When prices rise by 15% in 2025, buyers are paying more long-term for the illusion of affordability. Fourth, investors versus owner-occupiers tension. In Bundall, middle ring of Brisbane, townhouses under 1 million will attract both investors looking for 4% yield and first home buyers chasing lifestyle. The clash will push prices even higher, but could price out the very people the scheme aims to help. So how do you actually play this as an investor without getting caught in the hype? First, stick to fundamentals. Affordability plus yield plus vacancy. Second, target suburbs just under the new price caps, so don't stretch too much. Third, use rent vesting if lifestyle purchase clouds judgment. Fourth, always verify information like affordability, growth, and rental demand, of course, using SuburbsFinder. So yes, this new deposit scheme is going to inject a massive demand. The suburbs, where affordability meets livability, will be the biggest winners for both investors and owner-occupiers. In my next video, I'll break down suburb case studies in details, showing you exactly how to identify the next wave of hotspots before the headlines do. So if you found this useful, hit that subscribe button. And if you want to run these numbers yourself, check out SuburbsFinder. It's the exact tool I use to find these suburbs in minutes instead of weeks. Again, this is Gilbert. See you next time.